Welcome back. So the cues across Asia have been a little mixed. We had a mixed close on Wall Street as well. But there is a trade deal that's finally been signed. I'm talking about the US-Vietnam deal, at least when there's an in-principle agreement, so to speak. And let's see if that's going to be enough to cheer up the markets. Let's discuss this and more with the Hartmut Issel, head of APAC Equity at UBS Global Wealth Management. Hartmut, great to have you with us. Thanks so much for joining in. So let's start right there. You know, originally when those Liberation Day tariffs were announced, Vietnam got a real raw deal, right? They were threatened with over 90% tariff. The reality now seems to be 20%. How do you think the market will take this? And, of course, the deals to come.
The actual number, I think, is more or less what we expected, maybe a touch higher. The transmission side, right? So for these kind of also trading partners, especially what comes via or from China, rather, right? It has probably been a bit higher than we expected. Nonetheless, if we look at markets, whether it's Vietnam, whether it's China, perhaps, right, it doesn't take it too negatively. So yeah, certainly, I think we're looking forward over the next couple of days that more is coming, because also what we understand from the US, right, they're trying to do it a bit around the 4th of July, which is tomorrow already. So, yeah, I think we're going to see a lot more in the next couple of perhaps even hours, but certainly days.
But Hartmut, just dwell a little bit more on the point about China. How do you think China will react to the 40% tariff on trans-shipped goods? Because this is a direct message to China saying that if you are bypassing our tariffs by rerouting your goods via Vietnam, we're not going to allow it. Pay 40%. How do you think China will react to this?
Yeah, we have to bear in mind, if we count this from China's point of view, right, the transshipments there via Vietnam, we think are close to 1%, so it is not that large. Actually, what you could argue is maybe on a corporate side, right? So some of the companies that go that route, maybe they try to put a bit more production directly into Vietnam so that it, is seen or counted a bit differently. So these are probably the impacts. So none of these impacts is particularly large from a China point of view.
Hartmut, what about India? You know, we were hoping that we get a favorable deal, and, India could be the one that actually gets the sweetest deal. Do you think we still get one? Because the commentary in the last month or so indicates that it could be anyone's guess. What are your expectations?
Yeah, look, if I look at it, certainly from an India standpoint, right, and I think India was certainly here in APAC in the region, right, one of the first, if not the first one, right, since January, basically started the negotiations also much earlier than anybody else. Right? PM Modi was in the US and vice versa, right, JD Vance. So all these things have happened. So one thing is clear, right? Both the Indian side as well as the U.S. side, right? The U.S. also, they need to show progress, right? They cannot just say we have negotiation and nothing happens, right? They need to show that with some countries it is possible to reach these deals even before the 9th of July. So given also that the Indian delegation actually apparently stayed longer in the U.S. than initially was planned, that shows they're onto something. So I would argue from a trade point of view, India is more or less, it's clear that, at least an interim, right? It will not be the final deal, of course. It can never be. It takes a lot longer, but the interim is reached before 9th of July, and that I think is a given. But it's also probably the consensus in the market. So I'm not even sure if that in itself would drive the Nifty, for example, a lot higher. However, we do see the Nifty higher over the next 12 months. We have an attractive rating, but it's for different reasons. It's no longer so much for trade reasons. I think everybody has understood it and has that already to some extent priced in.
Yeah, I'm glad you brought that point up, Hartmut, because I was just getting to that a trade deal with the US obviously is very important for us, but it's not a make or break situation for the economy here or for the market here. And coming to the market, just tell us a little more about where your optimism on India comes in from, because I was just looking at Asian markets across so far this year in the last 6 months. And look at South Korea, look at Hong Kong. I mean, these markets have done so well, 25%. We are up only 7% this year. So people talk about earnings concerns, valuation concerns. But what makes you optimistic?
A couple of points. First one for me, is much more important than trade, if you ask me, at least from now on, right? Because trade is well understood and I think is in consensus. So we're looking at the earnings side, right? We need to understand all the way going back to the fiscal year 2024 for India, for Nifty, right? I mean, almost in our numbers anyway, almost 25% growth. It's clear that, the Nifty cannot give you several years of that, right? And we had at the point already forecast that it's going to come in lower. So now for the just closed fiscal year, in our forecast, we have close to 7% probably earnings growth, which is fairly low. So if you're a company, an average company that says, okay, I compare myself with 7% with only, so to speak, 7% before, that's much easier to beat than if I compare myself with a 25% growth base, right? So that is easy, but there's also many sector-specific reasons. Certainly on the financial side, although that's probably a bit more fiscal year 27 focused, but then it's really when it takes off. So as an investor, only sort of 9 months away, but you want to start positioning for that. And then also what comes to my mind is also a sector we like a lot is the consumer side, right? With the pay commission, of course, doesn't decide each and everything. There's other reasons, but of course that also comes inside and it only happens every 5 years. And we have an estimate that over 2 years, it benefits the GDP by an additional just slightly over 1 percentage point. So that's not small, also for the earnings outlook. So all of these things lead us to double-digit earnings growth, we think, for 2 years in a row after we had sort of a mid-single digit. And then why wouldn't I invest in this market?
Oh, wow, that's fantastic. And it's good to get that perspective from the outside. You said that you're expecting the Nifty to rise over the next 12 months. What's the target you have for the index? Or what's the kind of upside you're penciling in?
Look, if I have an earnings estimate that goes up by slightly over 13%, right? And you mentioned before, and I think it's a valid point, but what about the valuations? We're back to slightly over 20 times now, which is, we have seen the Nifty also higher, right? But it's not particularly cheap, right? I will admit that. But in an environment where the 10-year yields are continuing to come down, we have them below 6% to be precise, 5.8, I think, for mid next year. That is always supportive for the valuation side, right? Even if it's not particularly low, but that also helps. But even if we count that out, right? So the 13% alone, we have an estimate of upside for the Nifty of about, give and take 11%, maybe 12, somewhere thereabout. So we could talk about 27,500, somewhere there in that area over a 12-month base. So I find it difficult to suggest to anybody not to go into it at these current levels.
Thank you very much for that. 11 to 12% upside for the Indian markets, the Nifty heading to 27,500, perhaps in the next 12 months. That's the word coming in from Hartmut Issel of UBS. Let's drill it down then to